Business owners often use the company's bank and credit card accounts to pay personal bills and expenses, or simply withdraw money to pay themselves. Let's go over what to do when the business owner pays for personal expenses with a company account and how to pay the owner with a draw. We'll also show you how this affects the financial statements. Select Transactions and Bank Transactions to see your downloaded transactions. When you download a personal expense, it is tempting to exclude it since they aren't business-related. The problem is that every month you need to reconcile your accounts, which is when you compare your bank and credit card statements to what you have in QuickBooks to make sure they match. If you exclude any transaction that you'll see on your statement later, you won't be able to reconcile. First, enter the payee. If the transaction was with an individual or business that isn't on your suppliers list, you can enter a category of business, like restaurants or owner's bills. In the category field, choose an equity account. Most businesses have an equity account named Owner's Draw or Personal Expenses to track these kinds of personal purchases. Note that the equity account names may vary slightly depending on your QuickBooks subscription. If you don't have an account like this, select Add New Category and set up a new equity type account for it. Then, add the transaction. When the owner pays themselves, the process is similar. Enter the owner's name as the payee. If you don't see the owner's name, add them as a supplier. If money was transferred from a business bank account to the owner's personal bank account, use an Owner's Draw account. If you prefer to write a check to the owner, select New and Check. Enter the owner as the payee. Then enter Owner's Draw as the category and the amount the owner wants. If this was a handwritten check, enter the number. Then save the check by selecting Save and Close. Let's take a look at how these transactions affect your financial statements. Select Reports, then Balance Sheet. The transactions decreased your bank account balance. That's good, because the owner used money from the bank account to make purchases and pay themselves. The transaction also decreased capital and reserves. Capital and reserves is what the business is worth to the owner, and when the owner takes a draw or spends the company's money on themselves, the business has less value for them, so this makes sense too. Because you didn't use an expense account, the transaction never appears on the profit and loss statement, so it doesn't affect the business's profit. Now you are ready to record personal expenses from a business's bank or credit card account.